We don't need to have the London kill zone to be a day trader. You don't need the London kill zone to be entering with your higher time frame setups as a day trader either. There's a way of using day trading concepts to facilitate an entry on a longer term higher time frame setups. There are two essential times of the day IPTA refers to reset. The daily candle can point the ideal entries for all styles of trade. Power 3 refers to the open, the rally or decline, and then close. Obviously for an up close day or bullish day, we would see the open near the low of the day, a small little wick below the opening price, an expansion move or range expansion, then a close that typically closes just a little bit off the high of the day. The open or openings, it's the 0 GMT, and then obviously everyone knows about the midnight New York time, that opening price on an hourly chart. That's what we're looking for. If you understand the daily range and you understand what IPTA is going to do, or most likely to do, let's say it that way, and you understand where you're at in the PD array matrix, where are we moving from? Are we moving from a discount up into a premium, or are we moving from a premium down into a discount? Knowing that gives us directional bias. It gives us an understanding of what we should be looking for being a buyer or seller. We're going to be looking at IPTA true day open, and this is reset. The daily candle at 0 GMT, that's our beginning reference point for IPTA. That's true day opening. But then there's true day, as I refer to it when I'm trading London using the midnight candle in New York. What we're really doing is this: we're looking at the opening price and we're waiting for the opposite to occur in the daily range. When we're bullish, we're going to be buying near the low of the day or near the opening. The $1 million question is, how much lower from the opening will it go if it's going to be an up close? It's been staring at you all this time. It's been in your charts every day and you don't pay any attention to it. This little hyphenated little dash that appears on all the daily candles, or not candles, but open, high, low, close bar, that little opening hashtag tick to the left of your daily candles or bars, that opening is all you need to know. That occurs very, very early in the evening in New York time. When it's up close, we're trying to capture that big lines portion move up, and when it's a down close, we're trying to capture that big range going lower for a day trade. The key is you have to know where you're at on the higher time frame PD array matrix. Obviously, if we're looking for an up close, we need to be seeing the daily moving away from a discount array. It has to have already respected a discount array. So that way, the next trading day, we should see no movement at all, if very little, below the opening price at 0 GMT. So let's assume for a moment we have watched our daily chart trade down into a discount PD array, and we're expecting bullish prices now. Institutional order flow has been bullish. We've come down into a level that would be expected to be bullish on a daily time frame. We've hit a bullish order block, and price has shown a willingness to rally away from that. The very next day at 0 GMT, we're going to look at that opening price. That's your classic London setup. The London protraction, you may not be able to see it. You can't be there to watch it. You can't participate, if you will. What we look for is, yes, the opening price, but we have already arrived at what? We would expect that move down anyway. That's what we're looking for, that Judas swing, that protractionary state in the market where price goes lower to seek liquidity to make a move higher with an up close. All we need to know is, are we more likely to go higher or more likely to go lower? So if we set our daily bias based on the daily PD arrays and IPTA data ranges, and the quarterly shift is still bullish, everything that's significantly pointing higher, if we're in a seasonal tendency for bullish prices, if it's a Monday, Tuesday, or Wednesday, it's a loaded deal. The main thing is we have to see price having already respected a daily discount PD array. And then the very next trading day, you're looking at the 0 GMT opening price. For those individuals that want to trade Asia, but have the effects of London open, this is how you do it. So why 0 GMT? Well, you already have central bank dealers range closing right now. At 0 GMT, you know what the central bank dealers range is most likely going to provide you in terms of standard deviations. Wait a minute, I'm just going to buy it at 0 GMT? Yeah, you're going to use a 5-day average daily range as your stop. You would take whatever that average daily range is, subtract it from the opening price at 0 GMT, there's your stop loss, and you just let it rip until it trades to a premium PD array.